every week we get to talk about what's happening in the market from all of the 4 major markets. We specifically focus on Texas because all of our investments are here. We live here, we work here, we invest here. And we'll also go through the roll-up of the entire Texas market. So we don't yet have the February numbers, so we're still operating off of the January numbers. The February numbers won't be out until probably around March 15th for most of the markets. But these numbers, because I have the pending sales listed here, pending sales are our closest leading indicator of what closed sales will be next month as we close the month. But I just want to give you an idea of how we perform, just so you can see this. So in Texas, the average price, as I mentioned earlier, year over year, up 3%. Closed sales, however, were down 29%. So many of the would-be buyers have basically said, and that's why I asked earlier, like, how many of you guys were looking to buy last year? And maybe you sat on the sidelines saying, I'm going to wait for interest rates to go down. A lot of the would-be buyers have moved to leasing properties, and they've taken their ball, if you will, and left the playground. And their ball is their down payment, and left the playground to go and rent a property until they feel like either housing prices have gone down or they feel like rent rates, housing prices have gone down, or interest rates have gone down. In Austin, so Austin's the first major market in Texas that's actually seeing the reduction in year-over-year price. All of the other 3 major markets in Texas have not had a reduction in price to date. So last month in Austin, the average price $561,000, down 2.7% versus what it was the same time last year. The median price $450,000, down 6.3% versus what it was the same time last year. Sales in Austin down 27.3%, and our inventory has gone up by about 250% versus where we were the same time last year. So you can see by looking at our active listings, last year this time our active listings were under 1,400 active listings. Today we're at 7,300 active listings. That's a big jump, but I will tell you that that's still only means that we have a few months of inventory, and we're still kind of below that equilibrium mark. And that's why prices are staying, that's why we're not having a big drop in prices. And the lack of inventory has really helped us in this market cycle versus the inventory that we had, for example, in 2009, 10, and 11, we were oversupplied when it came to inventory, which that's one of the things that really hurt us when it came to our average price was basically flat for 4 years. But in this market, we're seeing that inventory still below what it takes to be able to support the amount of buyer demand that we have. Pending sales, our closest leading indicator to what closed sales will be next month, down about, about 600 plus units. This year, this time last year, the close price to the original list price was over 100%. Now the close price to the original list price is closer to 90%. And if you look at 2021 on the far left side versus 2022, the year-to-date sales were up 2.5%. 2021 versus 2020, and the average price was up 29.3% in 2021 versus 2020. On the right-hand side, I have the 2022 actuals versus the 2021, actuals. So the sales were down 18.3% last year, just because the interest rates knocked a lot of buyers out of the buyer pool. But the average price was still up last year at 10.4%. Partially because the first half of the year was at that fever pitch rate, and it was only until the last half of the year that we started to slow down, and it was only until this year that we started to see those negatives in terms of those year-over-year prices. I am forecasting that by May, because May of 2022 was such a fever pitch, that we're going to see larger reductions when we get to May of 2023. So what does that mean for you guys as real estate investors? How do you need to adjust your investing if you're investing here in Austin? If you are trying to use a comp from May or June of 2022, know what? That price is probably down by at least 10%. And what did we say your typical profit was on a deal if you use the 70% of ARV minus repairs formula? 10 to 15%. So if it continues at that pace, then what that means is your profit will be somewhere between 0 and 5%. That sounds terrible. So what do you have to do? Use the correct comps, which means, so normally I would say, yeah, you got to go back 6 months, you're going to be fine. And even, a year ago, I'd say if you had to even go back 18 months, you're still fine because prices have gone up since then. But if you were to tell me, Chanel, I went back, 6 months, 12 months to get this comp, and I'd probably say, be careful, right? Be careful. So let this part of the discussion inform the comps that you use for your buys, fixes, and flips. You guys understand that? So let me tell you something. How many of you guys are looking for wholesalers to bring you deals? Okay. What comps do you think the wholesalers are going to bring you? Those would be the comps from May and June of 2022. Why? Because they look good. Okay. Now, how's that going to look on your wallet in 6 months when you put that property on the market? That'd be terrible. That would be terrible. So please make sure this is critical as you leave here today. Let you get this right. Dallas, Fort Worth. So the average price was up 7% year over year. Closed sales down 27%. Pending sales, this is fascinating for Dallas. So pending sales in Dallas only down 4%, which is very positive. Even though it's down, it's very positive considering that the prior month they were down 27%. Where's everybody going? So I mentioned earlier, they're all leasing. So a lot of people have renewed leases, extended leases, got new leases. So the leases are up 25% year over year in Dallas, and the lease price up 8% year over year to $2,700. In Houston, the average price was $382,000, up 1.5% year over year. The closed sales were down 31%. Pending sales down 15%, which is if we're kind of on the turnaround from this. And what I mean is, when I say the turnaround, there is a psychological phenomena that occurs at some point. And I'll just ask, did anyone in here buy a house during the 1980s? Anyone in here buy a house during the 1980s? Okay, a couple of you guys. So, I've heard stories like, honey, we better hurry up and close on this house because I heard interest rates are going to go from 16% to 16.5%, so we really better hustle. Imagine the mindset, right? It's really and truly all about perspective, right? So what became normal was this 15% plus interest rate. We better get it while it's still hot because I hear the Fed Chairman Volcker at the time is going to continue to raise it. So I think that there is a little bit of a psychological phenomena that takes a minute to sink in. The trouble is I don't know exactly how many minutes that's going to take. But I'm feeling like something sinking in where buyers might be saying, okay, housing prices have not gone down. Interest rates have not gone down. In fact, interest rates continue to go up. Wow, honey, we better go and get that house now before Fed Chairman Powell raises rates again, because he's going to try and do that again at the next meeting. And I don't know when psychologically that happens for people. Plus, they've had another year to do what? If they were leasing, then another year to save. So to be able to increase their down payment, to maybe be able to pull back down their monthly payment as well. But that psychological phenomena will be coming. So there will be a moment when someone's going to say, oh my gosh, we better get that house now while interest rates are still only 8% because I heard they're going up to 9%. So try to imagine that, because I think that's coming. San Antonio, so I know we have some San Antonio investors in the room. Average price, $370,000, up 6%. San Antonio sales down 30% year over year. Pending sales down 27%, whereas everyone going, again, leases. So that kind of gives you an idea of what's happening in the marketplace right now. And guys, as we go to the next slide, I want to let you guys know, has this been helpful to you all? Yes. Okay, good, wonderful. Okay, I've done my job.